morning, everybody, and welcome along to another episode. And of course, in this particular one, we provide you with an update on the performance of the Portal Digital Fund and also the Radiance Fund, and a review of the market for the month of December and a little bit of what's happening right now. Naturally, it's been an extraordinary market, and there's been some very substantial macroeconomic trends that have impacted the price of Bitcoin, and really maybe a look at 2025 as a year that wasn't what everyone expected it to be. But for now, let's look at the fact that the December month, the CCI 30 was down around 6.5% or 7.4%, sorry, and the Portal Digital Fund was down around 6.5%, a little less, which is generally what it does as a reduced volatility fund. And when we're looking at the likes of the Radiance Fund, which is a fund that, of course, is leveraged into its downside position, which we'll explain progressively, the Bitcoin price was down just 3.6%, and the Radiance Fund was down 13.7% of the month, and we'll discuss that in more detail. But of course, here with us today is Greg Galton, the CIO of Portal Asset Management. Hello to you, Greg. How are you doing?
Morning, Deryck. Morning, everyone.
So December 2025, I got to say, it really finished the year much like the entire year of 2025, which was with unexpected events and disappointing reactions of Bitcoin to those events. What do you think's happening with Bitcoin? What's happening in that December reflection of the year of 2025? Why are we seeing that playing through to the price of Bitcoin and crypto, do you think?
Yeah, I think there's a lot of factors at play there, Deryck. I think when you look at 2025, you can really sort of split it into two halves. The first half of the year was all of the hype and exuberance around the Trump's presidential victory, his inauguration, his establishment of a strategic Bitcoin reserve,
Yes.
and what he was doing with all the regulations. All of that's kind of happened the way we wanted it to, but it hasn't really driven the Bitcoin price any higher. And then the second half of the year, we've really the market's become really driven by what I call macroeconomic ambiguity. So you've had the Fed cutting rates, but it hasn't been enough really to drive the Bitcoin price higher. You've had US stocks continue to perform well, well above what most pundits are calling for. You've got ongoing concerns about US economy, those sort of traditional assets that you think, that environment that you think Bitcoin would have done well in, it actually hasn't. And there really has been that capital rotation into these defensive safe haven assets, you can perhaps call them, in terms of gold and silver. It wasn't that long ago that Bitcoin had a larger market cap than silver. Silver's market cap about 3-4 months ago was about $1.8 trillion. Today, it's $6.3 trillion. It's added the market cap of Bitcoin to its current market cap and plus some. And I think really what you're seeing there is people are looking at the Japanese economy, realizing how heavily indebted the Japanese are, even more so than the US. And now we're starting to see signs that the US is agreeing to help the Japanese in terms of supporting their currency. And I think what at the moment is people are extrapolating that weakness in the yen into the US dollar. I think this whole narrative has been driven by a weaker US dollar, and the go-to for that has always been gold. And we'd like to think that Bitcoin also fills that category as well. But clearly, whilst most Bitcoin maxis would think to move into Bitcoin, a lot of the institutional money have moved into gold because gold does fulfill that specialist niche category of being an inflationary guard. So I think that's where the capital rotation is going. I think ultimately that capital flows into Bitcoin in the same way that's gone from gold into silver. So if you think of gold as Bitcoin and silver as altcoins, you're starting to see an altcoin rally in silver, if you think of it that way. I think ultimately that has to come into Bitcoin, but whether that's because we need a more prolonged US recession or concerns about a US recession and an aggressive Fed loosening policy and QE before we see Bitcoin rally, that's really what the question that everyone's really asking themselves at the moment. And at the moment, there's no real answer. Bitcoin is basically flat for the month of January after being down 3% in December. The last few months of the year have been very, very weak performance from Bitcoin in an environment where gold, today is over $5,000 per ounce. An extremely strong performance there. So we're kind of sitting on our hands a little bit at the moment. We do have this higher leverage to Bitcoin at the moment in the Radiance Fund. That's that increased convexity. So we do have a higher than expected delta to the Bitcoin price move. We're keeping that in place, and we've got the insurance puts in place to protect the downside for us, so we can afford to do that and then wait for that recovery in the Bitcoin price. And as we've talked about in our newsletter previously on these podcasts, at around about $115,000 per Bitcoin is where we see a full recovery in the Bitcoin within the funds. It's well below the previous all-time high of 126,000. So just sort of recognizing that leverage there, and basically we are waiting for the Bitcoin price to recover. We're not engaging in a lot of premium writing activities at the moment, a small amount, but not the key focus right now is really that sort of turnaround there in the Bitcoin price. And then sort of, looking forward, we recognize that the recent moves down have been uncomfortable for a lot of holders in the fund. And we are looking at ways to mitigate that downside risk, and then looking at incorporating those strategies into the fund very shortly. But that's just going to take a little bit more time for us to go through and really sort of bring that through to execution. So that's really what we're focused on. And then in terms of Portal Digital Fund, the fund was down, as you said, slightly less than the CCI 30 last month, 6.5% estimated, with the CCI 30 down about 7.5%. We've done quite a bit of analysis of the hedge fund returns for 2025. And I think that really reinforces our belief that those traditional directional strategies, such as the fundamental buy and hold funds, have ultimately failed to perform because they depended too heavily on market conditions. They do well in a bull market, but everyone does well in a bull market, but then they fall at 70-85% in downturns. So over the full cycle, this really leads to pretty flat or low single-digit returns. We estimate that for most of those fundamental traditional kind of hedge funds that are engaged in crypto, they were down between 25 and 55% last year. They did experience pretty significant losses due to liquidity issues and the altcoin token price drop. So the market was down 33. So some of them performed in line with the market, and others have done much worse than the market. So that really sort of gives us confidence in our pivot towards these market agnostic systematic strategies that are designed to generate returns in all market conditions. And we've already identified a number of strategies that we're looking to do over the coming months.
And so we've seen a real change in how Bitcoin has been treated and how it's performing and moving since the beginning of 2025. Did think that we were going to see probably more stability brought into the market by having institutional investors come in to the marketplace. And maybe we were assuming they were more like sovereign investors, sovereign fund investors, because what we have seen, of course, is that with we called it the migration of the whales, Greg, you called it that, through the year, where we saw a lot of big whale investors, original giant Bitcoin investors selling to macro hedge funds and groups listed on exchanges. But what that now means, of course, is that when there is a sense of risk off in the world, we're concerned about economic affairs, rather than the retail investors in Bitcoin going, well, I'm just going to buy more Bitcoin then because the fiat system is wrecked, as the standard view of a Bitcoin is going to be. Well, now there's these macro hedge funds in place, and these multi-risk asset and parity funds in place, volatility traders are in place, CTA systematic funds are in place, ETF arbitrage funds are in place. They're so liquid that a lot of these guys are selling Bitcoin all of a sudden, and they're just simply trading it very quickly when they see it's a risk-off time. So rather than what maybe Larry Fink has been telling us for a long time in the short term, that Bitcoin is a is a place for, how would you say, a safe haven investment. He's been saying, well, our view is it still is, but I think he's going, it's a safe haven investment over the next 5 to 10 years, whereas it's not over the next 5 to 10 days. And these highly liquid funds, are they not? They're trading so quickly as to impact, and they'll move from Bitcoin, and they might see as a risk on, and they'll move across. So what we're seeing is that gold's become the trade of fear, and Bitcoin's really become the trade of liquidity, hasn't it? If there's liquidity, bangs, Bitcoin goes up. If there's fear, they exit and it goes into gold. So it has been quite a change of the guard in the last 12 months, and not totally predictable. Is that fair to say, Greg?
Yeah, and I think that's always the case when you get institutional investors coming into an asset class, is they bring a lot more liquidity
Yes.
Retail historically have been quite sticky. They tend to hold even through cycles, where institutions, obviously, they're working to a monthly performance schedule that they need to outperform markets by, and they'll have positions on exchanges where they can short Bitcoin really easily as a source of liquidity. And when they see something happen over the weekend, or President Trump say
Yes.
something, in relation to China or Europe or Greenland or Venezuela, or, pick your country, and I'm sure Trump will have a beef with it at some point in time. But, that it's really the source of liquidity for them at the moment. So then they really are being drawn to that gold narrative. And of course, gold traded via ETFs now is the same dynamic, I think, that will drive Bitcoin with the Bitcoin ETFs as what drove gold 30 odd years ago when those ETFs were first created. So I think that those dynamics have yet to play out. We do still think that we think the 4-year cycle is either evolving or ending. No, we don't see it driven by the Bitcoin halving anymore. It's much more driven by global liquidity, macroeconomic conditions, and at the moment the view out there is very much it's a US dollar weakness.
Yes.
That the institutions are trying to protect themselves against, and that's why they're buying gold and, to a less extent, silver. But if you inflation adjust silver for the last 30 years, it's actually only halfway back to its previous all-time highs. So
is that right?
It hasn't been a great long-term trade. It's only been a very good short-term trade. So it's what's your time horizon. If it's days and months, and then insure. But if you're looking sort of longer term, then we still think that Bitcoin has that digital gold narrative, because, there are only going to be 21 million Bitcoin mined. There is absolutely no way you can change that. Gold does have that variable supply. And as the gold price keeps going up, there are going to be dumps of dirt out near Kalgoorlie that'll be worth a lot more today than they were yesterday. So that is an issue around the gold supply. So it's going to take some time for all these factors to flow through. So we're just sort of sitting there patiently waiting and for that.
So for the listeners all around the world, Kalgoorlie is about 500 kilometres inland from Perth in Western Australia. It's a giant gold centre, of course. And so that's what we're discussing at the moment. So really, Bitcoin is a safe haven asset in a broken system, but it's a risk-on asset in a stressed market. And our view is that the system's broken. It's just hasn't totally realised that yet, and it's heading towards realization that the fiat system doesn't work, and Bitcoin is going to become enormously valuable over that period of time. But even in this next 12 months moving forward, we're talking about Bitcoin reacting positively to the provision of liquidity, and that's quantitative easing and interest rate drops. And there are a couple of very big events coming up on a sort of a Western world macro position, and that is in November. We're heading to the midterm elections, and Donald Trump is in control. He's trying to get in control of the Federal Reserve. It's highly likely that we're going to see interest rate drop when he gets control of it in May, because at that stage he'll put someone else in and they'll drop the interest rates. It makes logical sense that if you do want to try and prove that the economy is in a better position than it was when he first entered, that you might do some quantitative easing and make money freely available to people, and off goes the economy. It's not rocket science to be able to throw those couple of levers. And that's what we broadly think. Is that right going forward, Greg, that we're going to see those occur and that will have an extraordinary impact on Bitcoin?
Yeah, I think that's certainly the case. And then, even though inflation hasn't come down perhaps as much as everyone was hoping, if Trump gets his way and gets 1% interest rates like he's calling for, then that could stimulate a huge amount of the economy and become very inflationary.
Yes.
And then what's a good hedge against inflation? Well, gold and Bitcoin. So I think the gold investors can see that. It hasn't yet rotated back around into Bitcoin yet, and I think it will. Gold at the moment, I think, is capped at something around $35 trillion.
Yes.
Bitcoin is at 1.75, call it.
Yes.
If only a small percentage of that money rotates out of gold into Bitcoin, there could be a massive, massive price increase coming through, and that supply squeeze really sort of impacting. So we're very much of that view, and we'll continue to hold that view until something sort of changes that, but I really can't see anything changing that in the short to medium term.
Indeed. Anything else you'd like to cover, Greg?
I think that's covered everything. I think we've given the gold bulls something to cheer about, and even the silver bulls, and hopefully next it'll be the Bitcoin bulls.
Exactly. I couldn't agree more. The frustration is that they really are loving the limelight because gold has performed so exceptionally well over the last couple of years, and it's up a few 100%. One has to remember that Bitcoin's been up a few 100% every 4 years for some number of years. But anyway, it's their turn to shine. Very good. And we do believe Bitcoin is on the way to having its day in the light too. Okay. Look forward to seeing you next month in regards to more discussion on the macroeconomics, and maybe in a couple of weeks' time if there's something interesting that we'll report against too. So for now, bye for now, and see you again soon, Greg.
Okay, cheers.